morning, this is John Piper with a weekend video clip, and it's Saturday the 11th of October, and we're looking here at a chart of FTSE. Now the key points here are the peak there, the first leg down here, 1, 2, we've got 5 waves down to there I think, or this abnormal 2 wave. You count this various waves actually, but this looks like a third of a third now coming in. We have got expiry week next week. This is an unusual action during heading into expiry week, but expiry week is a technicality, so it's often overridden by strong market action. Remains to be seen whether actually the week itself has done this, because we are due a bit of a bounce. I would mention that my extreme stop system is proving very useful in these markets. With extreme stop, you just put a stop below a certain level, say that key low there, and then you can just ride the move down. This is what we did actually with the DAX trade I mentioned to you in a video I think about 10 days ago, which is producing about 500 points of profit if you stayed with it. And you can do this again and again and again. The extreme stop link is in the email that comes out with the report. So I would suggest in these kind of strong trending markets, extreme stop is an extremely useful technique. Let's now have a look at the DAX. Okay, on the DAX we saw an initial decline, so a slightly different pattern here on the DAX. You got the peaks here above 10,000, first leg down, very strong rally back up again, and then we just sailed down ever since, breaking the key lows yesterday in fact. Now again, I said, to expiry week tends to be a quicker period, a slower period of time, slower price action, but no sign of that as yet. Remains to be seen how it works out on Monday morning. Let's have a look at this in a bit more detail. Okay, this is the second decline. So a very clear 5-wave decline there. 2, 1, 2. This all looks of a piece really. Difficult to really distinguish any particular waves. I mean, there are waves, but quite how they count is difficult to see. So we probably should be near a low, but I mean 9,000 has cracked pretty swiftly. We're now at 8.8. We went down on the Dow last night, so that's probably, the actual real opening will be even lower than that. Obviously a serious decline. The actual point I mentioned going short was I think around here somewhere on that extreme stop. You could use any of these major lows for extreme stop. It is ideal for these kind of markets. Look at the Dow now. Right, the Dow's fallen almost exactly 10% now. We started around 17,300. 1700 off there takes us to a round down here, 1660, 1650. The wave pattern here is not, well, it was fairly clear. 1, 2, 3, 4, 5. Then A, regular B made new low C. Then a nice clear sort of start to wave 3. But then it all got a bit dithery with this move first. Then maybe a 1, 2. I mean, this could be a third of a third coming in. So again, we could see fairly fast action coming on Monday. That's the only wave count actually that would support this particular wave structure here. Certainly no sign of a low, but again it's expiry week, which tends to be a time of stability. The major players are more concerned with jockeying for the expiry of their options rather than anything else, and they obviously can have an impact on the market. So right now it looks negative. We have got this break, not significant. We didn't see follow through last night, but nevertheless we have got a clear break below the lows. Right, a quick look at the Nasdaq, where we saw the market moving high into late September. Fairly dithery decline, in fact, until yesterday when it started to actually break below the lows quite substantially. So this has now joined the party. I think these declines are going to go further. The question mark for me is about expiry, really. As I say, we normally have a quieter period in expiry, and we are overdue a rally, I think. It rather depends on Monday. But what could happen is we could get followed through Monday morning, and maybe some counter moves will come into expiry later in the week. After that, I mean, the fast action tends to come in after expiry, which is a somewhat worrying thought considering the action we've seen into expiry. But we'll deal with that in next week's report, I think. Look at gold now. I covered the basics here in previous reports. Basically, we've got this was a failed retest. Quite a nice rally now, in fact. 1, 2. I mean, well, it's more like an ABC with a B and now a C coming in. The best count is a fourth wave. That we've got more downside to come to break 1180 more clearly to make currently got a bit of a garbage low. If we saw a nice spike below 11.80, it would be a much clearer signal. Not the markets have any need to give us any clear signals, but let's say the rally is okay, but it's not huge. We've only got about 40-50 points so far, so it hasn't even taken out the peak here, in fact, which I suppose is the first obstacle. So overall, I'm still suspect about this particular rally. We're also in a deflationary environment. It's been disguised by all the QE, etc. But what's notable about QE is it hasn't produced any inflation, which is what you'd expect with all this money pumping into the system. So all it's really done is combat the deflationary forces. Deflation is not good for stock markets, which is why we have QE yabos. I mean, also of course the debt crisis. The continuing debt crisis is hardly over, but the one we had in 2006-2007 has been dealt with essentially, although some banks are still suffering, I think. Anyway, the point is, deflation environment, gold doesn't necessarily do so well, because in a deflation environment, money is more valuable. Gold therefore is unnecessary. However, it's when you get crises, a financial crisis where the system's under systematically falling apart, as it were. I'm not saying that's necessarily the case, but there are theories it could be. So there needs to be a reason for gold to rally. Now we have the wave pattern would become quite solid if we saw this new low I've been talking about down here. If you haven't seen that yet, but that would certainly make the pattern look clearer. The issue is, of course, how much lower could it go below 1180? But clearly the deflationary situation, which I think has been heavily disguised by QE, is certainly of concern for gold. Right now the pattern supports a rally. We have fallen away for quite some time, and there is now a crisis developing, or there have been crises developing all the time, but the markets are beginning to suffer from that crisis. So my views on gold remain the same. I'm just slightly concerned about the longer term potential for gold in a deflationary environment. Some of you probably have some views on that. I'd be very interested in hearing what they are. Finally, look at pound dollar. Okay, this is a decline so far. As you recall, I was recommending buying dollars and euro, which hasn't done so well, but we have a wave down to there, which could be a complete wave, or it could just be a 1, 2, 3, and this could be a 4 and a 5. If this is a 5, we've still got one more leg to go. That would be a 3, that would be a 4. So one more move down to around there to complete wave 5. So I think we could be close to seeing a bit of a bounce here. The key support right now is there. Depends what happens if that breaks. I mean, it's possible it is low itself, but then the wave count wouldn't be quite so clear. I'll go down on the detail leg. One thing that is clear is the ABC rally here. ABC, and there are similarities between this rally and the rally on gold, of course. Gold and pound dollar tend to work in some kind of harmony because they're both based in dollars, of course. So this is not a dissimilar pattern. We've also got a 1, 2, that easily become a 3, 4, 5. So again, I think we're going to see a break, but it may end up being a buying opportunity, not a selling opportunity. Okay, that's all for this weekend. Thank you for listening. If you found that interesting and useful, I'll be back with the opening report on Tuesday morning. Thanks again, and bye for now. Have a great weekend.